Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area. This area, in fact, was acting as previous monthly support here, preceding all this rejection to the upside. Then the market broke below the zone, retested it here as resistance, respected it as resistance, and the market got rejected to the downside. Then the market broke back above the zone. So this previous resistance that was support here is now once again turned support as the market is approaching it from above. So there is definitely the possibility to see a potential rejection to the upside being created away from this level and the market finding support at this zone, as already did when they was testing it here. So on the monthly, everything seems quite bullish. Now, from a pattern standpoint, we can also notice how we have an inverted head and shoulders getting created. We have the left shoulder here, the head here, the right shoulder being created at this level. And when you have an inverted head and shoulders, you also have an impulse and correction. And if you want to measure the correction after an impulse, you have to take your Fibonacci from the low to the high of the impulse leg, which shows us how we have the 0.618 Fibonacci retracement, so the golden ratio, lining up exactly at the same level of horizontal support, which means that actually we have confluence of support inside of this area that increases the probabilities of a potential push higher away from the zone. And when you have confluence of support, there is increased probability of getting institutional longing. And we will be speaking about institutional longing later on when we move once again to the order flow. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, we can notice how we have a market which has just created this overextended M pattern. And in general, when you have the creation of an overextended M pattern, you would expect a potential push higher to be created and for the market to complete the M pattern with a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. So on the weekly, since we have this overextended M pattern, anytime we could expect a potential push higher. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, at the moment, everything is bearish. The market has been creating lower lows and lower highs. And until the market will remain with such bearish structure, it can easily continue lower. However, we have to remember that all this area is confluence of support from a monthly standpoint, and we must also keep in mind how we have that M pattern on the weekly time frame. Now, before we dig deeper into what we have from a technical perspective here on the daily time frame, first, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing on the NZD. Now, first of all, when we're looking at the NZD, actually we're looking at NZDUSD because all currencies on the spot are traded against the USD. And on NZDUSD, clearly with the last reports, we can see how institutions have been shorting NZDUSD, going from 10k net positions down to minus 6k net positions. So clearly institutions have been shorting NZDUSD. The price has been dropping aggressively, as you would expect in a situation like this. However, we have to keep in mind how this area is confluence of support. And even though we do not see institutional longing yet, we could see it in the near future. And that is exactly what I will be looking at. Because in a situation like this, if we start to see institutional longing, that would make the probabilities of a potential push higher definitely higher. So what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market from an intraday perspective, and institutional longing it starts, so we start to see net positions getting increased once again, at that point I definitely would not be surprised if the market would create a rejection to the upside away from this confluence of support area. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.